Many warning signs are flashing red right now, and no one can know or pretend to know how 2024 is going to play out. We're in the middle of what is a massive economic downfall, which is just slowly churning along at the speed of an economic downfall. And while it's doing this, it's just inflating this massive risk bubble that we're all going to have to deal with. That's what this video is about. I'm going to talk about how this risk bubble is growing and what you can do about it, how to avoid it, and how it's going to affect everything. But what does an economic downfall look like? What do I mean by that? An economic downfall looks like a government which continually runs out of money and continually runs out of money, and again, and they will always do this. Most recently last week, they had to kick the can down the road a little bit further. They just put it off, but they never deal with or fix the problem by gaining or building fiscal responsibility that's needed to get us out of this downward spiral. An economic downfall looks like an absolutely unpayable, comically unpayable level of debt that we've taken on. This economic downfall looks like 65% of American adults living paycheck to paycheck. And even with interest rates at a 40-year high, to fight inflation that was caused by the Federal Reserve, there's signs of inflation. I'm going to show you in this video that it's absolutely doing what I told you months and months and months ago, quarters ago, that it was going to do, which is bounce back higher. 70% of American adults talk about financial stress, financial uncertainty. Meanwhile, 1 in 4 parents are struggling with getting enough food or paying for their rent or their housing. Now, you may already be one of those stats. Don't feel bad. There's a lot of people who are going to be in the same boat as you. But maybe you're not in those groups. You want to avoid being in those groups. So whether it's already affecting you, this economic downfall, or not, this video is about telling you what to do about it, how to make sure that you land on your feet, help people that you care about. And you need to decide for yourself if you agree with what I'm saying or not. And if you do agree with what I'm saying, there's probably a lot of things you're going to want to be doing right now to address this issue. Many things, for example, cashing out a little bit of some high-flying stocks and waiting. And even if you get back into the exact same stocks 2 weeks from now, you'll understand why I'm saying this as we go through this video, especially when we talk about the S&P double top. And remember that nothing in this video is intended as personalized trading advice for you in any way at any point. But the setup that we're dealing with is a potential double top in the S&P, all the uncertainties and insecurities about what's going on with war, and the levels of investor complacency are really freaking me out. And when you combine these three things, this sets up a risk window where you might want to sort of get out of the riskier stuff for a while and let all this commotion pass by. And we may come out a lot better on the other side of this, so then you can jump back into the same investments. But I'm just saying you might want to consider being a little bit cautious right now because of everything we're about to talk about in this video. That doesn't apply to the stocks that we pick for the newsletter, so don't think that. Now, just before we get into the 3 things that I want to talk about, please remember to subscribe to this channel because we're going to help you through this economic downfall that we're all dealing with together. Help you thrive, help you understand it, let you know what moves to make. You're going to want to see our next video, so you might as well subscribe right now. I have a question for you. What happens when retail investors are not professionals, they're more like you or I or your neighbor, regular people, retail investors, not institutional investors. What happens when retail investors don't have any more money to buy stocks? A lot of people don't have a lot of extra money right now, and that eventually trickles down to where someone's not able to buy a stock. Even if they know it's a good stock, they think it's going to do well, they don't have the money to bring to bear to purchase the investment. Part 2 of that same question, what happens when we run into something, say, for example, I don't know, a recession, and things get tougher? Do retail investors buy more stocks, or do they sell stocks that they have? They always sell stocks they have, especially if those stocks are showing a gain. And a lot of stocks are doing pretty well right now. So it's easier to sell a stock that made a profit than one that took a loss. So you could see a lot of stock selling or lack of buying, both combined, among retail investors. That's going to be a downdraft or a downward pressure on stock valuations. And not too long ago, inflation was at 9%. And before then, I was telling you it was going to come down. And once it was at 9%, I told you when it falls, inflation, when it falls, it comes down pretty quickly, as it has, as you've seen. But at 9%, inflation hadn't been higher since 2002. At a point when to a person, to a man, to a woman, every YouTuber I watched a lot of them, and about 95% of the articles I read a lot of them, they all said inflation was going higher. Some of them even said much, much higher. But they don't know what they're talking about. And I'm taking a victory lap because I told you it was going to come down and bounce. As you've seen, here is what's going on with inflation right now. There's your inflationary bounce that I warned you about ages ago. And now what happens next? We'll get into that in this video. And remember, this is the latest chart of inflation, the latest read. And despite these incredibly high interest rates, which are designed to punish the economy and everyone in the economy, which is you and I, now that inflation is starting to bounce back higher, I'm not sure what they can possibly do. Just raise rates even more again, I guess? Overall, no matter how you look at it, this is just a time right now, for a short window of time, where there's dramatically more risk than potential reward right now. And so maybe it's a good idea to avoid the riskiest times. But let's get into the three things I want to talk about that are setting this all up. Number one, the S&P double top. Here's a chart of the S&P 5-year chart. It's going to show you there's your double top right there. Is it going to be a double top? If it comes down, then it is. If it breaks through and keeps going higher, then it wasn't a double top at all. But with technical analysis, the theory is that you always wait for confirmation. What does that mean? You wait for confirmation when you see a pattern, you expect something to happen. You wait until you see that it's starting to play out as you expected. Confirmation on a double top in the S&P 500, for example, it would be a dramatic move lower if this is an actual double top. So far, it seems to be. Here's a 1-month chart of the S&P 500. These are known as, especially this one, is known as a spinning top. That's an indicator. And you guys would know all this if you took my trading chart course, which is worth pennies on the dollar compared to the cost for how much profit you can get from knowing this information. Well, this is a spinning top, which indicates indecision among investors. And indecision implies a change of the current trend. The trend was dramatically higher. Now you've got indecision among investors. That usually indicates that that might be a top. So if it is a double top for real, then we got a lot of downside ahead of us in a short window of time. But we'll know in a week, 2 at most, if this was actually a double top. How will you get confirmation? If it bounces and starts coming down lower, that's a double top. If it broke through, it might have a lot higher to go from there. But it won't take long to play out where you'll know which way it's going. It's not going to take months or anything like that. And I told you about war and the uncertainty of it. I always tell you that bad news is not as bad as uncertainty, the way it plays out. A lot of times, the uncertainty is the worst thing. That's why you hear people who get diagnosed with an illness finally after years of dealing with trying to figure out what it was. And they say, I'm glad to know that it was A, B, or C. When they get the negative diagnosis, they're relieved. That's the same concept. But as you know, and I always tell you, it's very important to look at all macroeconomic events worldwide, especially when you're dealing with investing in stocks. You want to buy shares of Apple, you need to know what's going on in the Red Sea. One thing that's not uncertain is the war against Ukraine, launched by Russia needlessly, always picks up through the summer and fall. The spring, it's too muddy. The machinery slows down. The war always slows down then. But you're now going into a period where things are going to get more active in the Russian war. Meanwhile, there's got Venezuela possibly invading Guyana, a war in Kosovo and Serbia about to arrive. And the one war that nobody's talking about, 15,000 people killed, 33,000 people injured. You tell me what war that is. That is a civil war going on in Sudan. And there's actual ethnic cleansing concerns there as well. You've got Turkey shooting missiles into Syria. You've got Iran shooting missiles into Pakistan. Russian warships and submarines in the Red Sea. Also Iranian warships, Indian warships. The American carrier group, which comes along with submarines, battleships, everything. The UK aircraft carrier group. You got North Korea changing their constitution to make South Korea their number one enemy, and they're teaching the children at a very young age. So when you take all this complexity, where one little thing can set off any other number of events from it, I ask you, when you look at all the things going on just in the Red Sea alone, let alone everywhere else in the world, what could possibly go wrong? After war and the S&P double top, potentially, I'm concerned about the complacency of investors. And people usually think it's about the stock market. It's not just that. It's about the way the government runs even. They're complacent about the debt. They're acting like debts don't need to be paid. And every time there's a fiscal cliff or a government shutdown, their answer is always just take on more debt, create more money. And they act like they saved the day or that they fixed a problem, and they get a paycheck and they go home to their families and have a great life. They didn't fix the problem, even though that's their job to fix the problem. They are not doing it because I think people are way too complacent that they think that debts don't have counterparties and that they don't need to be repaid, when in fact most of the debt that the government owes is owed to you and other Americans like you. But as I tell you, you can tell complacency among investors when the volatility index or the fear gauge, the fear index is low. That means people are not worried about anything going wrong. And the government just, again, had to take on more debt to avoid running out of money. And I said it was a week ago, might have been 2 weeks ago, but it was recently, and it doesn't matter. They're just always going to run out of money again and again. But here is a chart of the VIX, the fear gauge or the volatility index over 5 years. So you can see where is complacency generally. And this is a chart from RIA Advice. Here is a shot showing you how low the VIX is beneath the historical average. We're even more complacent than historically how complacent people are. When they're already too complacent, we're even more complacent than that. The worst punches people take is the ones that they're not expecting. That's what's the problem with complacency among the mass population that surrounds you right now. No one's understanding the level of concerns that they should have based on everything that's going on with the economy and the world at large. So when you combine the three things of the uncertainties of war, and potentially, hopefully, it doesn't get much worse, which it probably will, and then you look at the complacency among investors, and you consider that this S&P double top might actually be a double top, you combine those three and it paints a very bad picture. You may want to step out of a lot of investments right now. Just let this period of time pass you by. Maybe it isn't an S&P double top. Maybe the war doesn't break out more. Maybe the complacency doesn't matter. Maybe debts don't matter. And we all just have a happy life going forward from here. If that's the case, I'm sorry that I was wrong because I don't see it playing out that way. And some of the moves you could make is maybe get involved in some things that will do better because of these concerns. For example, if it is in fact an S&P double top, share prices will decline, and there's a lot of ways you can make money from that. Wars could expand, and things like oil and gold have risk premiums. They have distribution concerns, all of which drives up the prices. However you want to look at it, the stock market has so much of this wrong right now. Nothing is more clearly demonstrated than the way that investors are treating gold mining companies. All I see there is incredibly great value. But that's just me personally, and I'm not telling you what to do. But with gold, I told you many moons ago about how the central banks were buying so much gold. China was using proxies to hide their purchases. All this gold's coming from Switzerland, going right into China. I showed you guys all of this. And it's a matter of time. It's not just China, but all these central banks all over the world buying more gold. You know the price of gold is going to go higher, as it did, and hit record highs in every currency on the world except for the US dollar. And then it hit a record high in the US dollar too. A big part of that is going to be more and more currency liquidation, which is how they keep avoiding these government shutdowns. They just liquidate the currency. They liquidate your currency. They take the value of the dollars in your pocket right now and they make them less valuable. They steal a little bit of your wealth. And if they do that from everyone, they take a little bit of everyone's wealth, then they can get the government to keep on functioning. This is depressing. It's ridiculous. It's preposterous. So there may be some downside in the near term. In a couple weeks from now, we'll know if it was a double top in the S&P. I don't believe that oil prices are going to keep on going to the moon until we get past any kind of recession or depression, because that's going to lower the demand globally on oil. But the opposite of that is gold. I think that gold is going to do incredibly well. And that benefit hasn't hit the gold mining stocks yet, and it's going to in 2024. And I'm not telling you what to do or what's going to do well or not. I'm not telling you anything. I'm just talking here, telling you there's a big risk environment right now that could take out a lot of investors, almost everybody. And you know this to be true. Almost everybody is asleep at the wheel. There's a lot of significant, major things going on that people are just ignoring because there's so many of them. Oh, massive earthquake in Turkey that killed 40,000 people. Well, now we're on to the new thing where everybody died in a fire in Hawaii. Okay, now we're talking about Gaza. Now we're talking about Russia. And we're all just focusing on one thing at one time. But when you put them all together, we're in a really, really bad situation right now. And everyone's acting like it's all happy days are here again. Of course, there's plenty of opportunities in low price, high quality stocks that we find. I myself have right here 18 pages of stocks I'm going through one by one. I go through them one by one until I find the best opportunities for you. But you're going to want to watch our next video, so please remember to subscribe. We're going to keep you guys on the right side of things. All the great content from the Peter Leeds team, sliced up, categorized, searchable, available in your pocket all day long. Due to popular demand by you guys, we're bringing back the Peter Leeds app. Available $20 a month, or you get it free with your newsletter at peterleeds.com.